It's the weekend and you have financial questions that need answering. That can only mean one thing. It's time for Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Welcome to Jill on Money. We are delighted that you are joining us today. Thanks so much. Oh, gosh. Mark, you getting a refund this year or not? No refund? Got to pay, huh? Poor baby. The IRS says that 70% of taxpayers are getting refunds. 7-0. Last year, the average refund was something like close to $2,900. That's huge. Anyway, don't forget, file your taxes, file electronically. You'll probably get that refund in less than 21 days. And I do love the IRS To Go app, or my favorite, where'smyrefund.gov. Oh, gosh, tax season just does not bring out the best in all of us. If you've got a financial question, we'd love to hear from you. Our phone number is 855-411-JILL. Our email address, probably the better way to get in touch with us, askjill@jillonmoney.com. Askjill@jillonmoney.com. If you haven't done so, sign up for our weekly newsletter. Mark is quite excited by this. I see your excitement. Don't make me a liar. I told him we could get 5,000 of you to sign up for the newsletter before the end of the year. He only wanted 1,000. I want 5,000. Shoot high. We start every program with a little bit of you. So let's go and take a call. Jeff in Massachusetts is on the line. Hi, Jeff. Welcome to Jill on Money. How are you?
I'm great. Hi, Jill. I love your show. I've been listening to you for years and just have learned so much.
Oh, aren't you? I appreciate that. Tell me what I can do for you.
Well, I was a late starter as far as saving for retirement. I didn't really start until I was 40 years old. 59 now, and thought I was plodding along doing okay. And then over the past year, I made a decision that I think is going to mess everything up, and that's why I needed to talk to you. I have tried to talk to a couple advisors, but I think they only have their eye on an IRA account that I had, or a 401k account I have from a former employer. And they're not really asking me questions about me. So what I decided to do about a year ago, and I'm in the process, is to adopt 2 or 3 children from state foster care.
Wow. Holy smokes. Good for you. So has this already happened? You already adopted them?
No, I'm in the final licensing stage right now.
What do you mean 2 to 3? 1 wasn't enough? You had to go straight to 2 to 3?
I grew up in a large family.
Uh-huh. That's a little bit crazy. Do you have kids otherwise?
I do not.
Okay. So you're waiting to hear if you can adopt 2 to 3 kids from foster care. So far, you're the do-gooder of the month and maybe the year. So let's just start there. That's pretty awesome that you're doing that. It's amazing.
I'm going to get more out of it than they will. So, but thank you.
All right. Well, very bad financial investment, children. You know that, though.
Oh, yes, I know.
We always say that to people. Don't think you're going to get that tax deduction. Not going to go so far. So tell me what's going on about that. So around that, what else is going on in your life, and how can I help you out?
Well, I had been saving for retirement. So I have retirement accounts that total between IRAs and 401ks just over $1 million.
Great.
And I also, from a former employer, have a pension that I'm eligible to draw on, or I had been from the time that I retired from that company, and but I haven't touched it. So it's I could take a lump sum of about $230-ish, or if I were to annuitize that right now, it would be about $1,100 a month.
That's nice.
For like liquid assets, for checking, savings, it's about $130, and then in non-liquid assets, which would be like my primary home, a beach house that I have an interest in, a couple buildable lots. I really like real estate, and over the years, I've dabbled in that a little bit. There, it's probably about $1.2 million of
of
No,
equity.
I'm sorry. I'm sorry. It's 750 of equity.
That's still pretty darn good.
Yep.
Very
And then,
nice.
so liabilities, my liabilities are about 350. So when I take my assets, the liquid and non-liquid, and subtract out the liabilities, I'm at like 1.2.
Mm-hmm.
Salary is 2 with a 30% bonus.
That's
And
great.
then, I have some long-term incentive. I fully fund my HSA, but I don't use it, so I have about 45 in there. And I stand to inherit maybe 200 sometime in the future.
Okay. All right. So
And I'm
far,
just
so good.
like-
This is good.
Yeah, I wish I felt that way.
Oh. All right. Let's try to make you. All right. First of all, pre-children, because I want to
Yes.
just get a sense of that. Pre-children, you were feeling fine?
I felt like I was on target. I would talk to a couple financial advisors just to try and give me that, I don't know, that sense that, yeah, or attaboy, you're doing okay.
Right.
But then they were always focused on, I have a good-sized 401k. That's where the conversation always went. And I'm like, it just, in my gut, it just told me, all right, you're not listening to what I'm here for.
Yeah.
You want my money. And they weren't CFPs, so that's really where, I feel that I could maybe trust the CFP a little bit more.
Mm-hmm. Mm-hmm. Well, I mean, at this point, if you were looking at, again, like pre-children, on your $200,000 plus your bonus, plus all, like your liabilities, as you said, it sounds to me like you're saving a lot, right? So how much do you need to live on out of that 200?
So I put a spreadsheet together. And,
of course you did.
I'm looking at about to live by the way I do right now without doing anything extra. It's probably like around 60.
That's awesome.
Paying mortgage and stuff like that.
Right. I mean, that's amazing. And how much longer do you think you're going to be working?
Well, that's the thing. I mean, I always want to do something, but it would be nice to have the option to just say, you know what, I just want to leave and just focus on raising these kids.
Okay. Hang on one second. I think we're going to keep you for a second segment because now I get where you want to go with this, and this is more interesting now. So when we come back, let's talk about what exactly it is that you will need to do if, for example, you decided, hey, you know what, for the next 5 years while I take care of these kids, I want to have a slightly less, maybe you take a lower salary, but you have a little more flexibility or something like that. But let's try to figure that out. So when we return, we're going to talk to Jeff in Massachusetts, who is, again, unless you guys call me, he right now leading contender for most virtuous caller of the year because he's about to potentially adopt 2 to 3 kids. 2.5 kids from foster care. You're listening to Jill on Money. If you've got a financial question, let us know. We'll help you out. Ask Jill at jillonmoney.com. We'll be right back.
Follow Jill on Twitter and Instagram for more personal finance content. Just use the handle @JillOnMoney. Now, back to the show.
You're back with Jill on Money. And before we went to the break, we were talking to Jeff in Massachusetts. He is just amazing because he's 59 years old and he is in the process of potentially adopting 2 to 3 kids from foster care. So, Jeff, we talked before the break. You said you have about $1 million in retirement assets, which is fantastic. And you also have about $130,000 in checking savings, kind of liquid stuff. And then about $750,000 in equity in various real estate, your primary, interest in a beach house, buildable lots. and you're going to inherit about 200 grand. And so now the question is, for you, I guess, you maybe want to step back from this higher pressure 200 grand a year job and be able to spend more time with the kids you're about to adopt. Is that really the core issue here?
That would be it.
Okay. But you only need 60 grand to support yourself. Although, will you need more when you have kids?
Yeah, I'm sure you do. They eat.
They do. I hate that about those kids. But because you're adopting from foster care, don't you get some money from the state or from the government?
They do. They provide a supplemental payment for each child until the age 18. Mm-hmm. Ideally, what I would love to do is to be able to just put that money into a savings account and give it to them when they're, when they turn 18 or they go to college or something like that. Also, college is also paid for by the state.
College is paid for, but what? At what level? I mean, is it paid for at a state school?
Yes, it would be a resident tuition for a state school, but it also includes room and board.
Okay. Well, you live in Massachusetts. The UMass system's a very good one.
Yes.
So let me think about this. So right now, tell me about your career. I mean, what could you step down? In other words, there's some people they've got jobs where it doesn't allow them to kind of downshift. Do you have a kind of career where you could free yourself up a little bit and earn less? Because obviously, even if you needed to take home, I don't know, 90 grand a year, that would still allow you to pull back a little bit. Could you pull back a little bit?
I could, but here's the thing I'm faced with. At the age that I'm at, that is an obstacle, I view. And for higher paying jobs, and by higher paying, I'm saying 90, I would consider to be a higher paying job. And the other is that once you're making a salary where I am right now and you're looking at that, you get that raised eyebrow like, why are you doing this? You're not going to stay here very long.
Yeah. You're right. You're absolutely right. So I'm sort of thinking this. I think that, first of all, you've done a great job. You really have. This is a good story. You don't have any other thing to take care of except yourself and these kids. What I would do is this. I think that I probably would not change careers or do anything different right this second. Right. When do you think that you will hear about the adoption?
In about a month.
Okay. And do you work in a place where you could take some time off, just like family leave?
Oh, yes.
How much time can you get off?
A couple weeks.
Okay.
And then I have a flexible schedule, and work is aware of what I'm doing.
So, I mean, I think don't do anything. Okay. So now I'm hearing this whole story, and I think you're feeling overwhelmed because you're about to do something completely overwhelming. I mean, let's not sugarcoat it. It's intense. It is totally intense, and I get that. I think the money stuff is the least of the issues. I think your money situation is very good. I think that you have done a terrific job of saving. If anything, what I would say is if you can simplify your financial life, I would do that. And that may mean for you that, like, hey, instead of like having real estate and doing this and doing that I just I'll sell off some buildable lots. I'll put some money away. I'll make that my extra money, but just whatever it takes to make sure that you don't really have to do anything. The money that you have in your investments, try to automate it as much as possible. Are you managing your own money?
I do.
Are you feeling comfortable about that?
No. I go into a number of target date funds. I don't buy any individual stocks. They're all funds.
Okay. So is the bulk of the $1 million in a current retirement plan or old plans?
The bulk is in an old plan.
Mm-hmm. And where is that? Which you have it like at Fidelity or Vanguard or something?
It's with my current employer. I left it there.
Okay.
And that's why the financial advisors are drooling over it.
No. So it's all in one pot, right? Mostly. Yes. And how are the choices within your plan?
Oh, the choices are great in the plan.
Good. Okay. Do you have an option that is automatic rebalancing? Is that an option in your
Yes.
plan? So
Yeah.
do you use that?
I played with it, but I've never pulled the trigger on
You
it.
should totally do that. You totally need to do that. What's your allocation right now, generally speaking, like stocks versus bonds versus cash
All
versus
right.
real estate?
It's fixed is 11%, bonds are 14%, and the balance is in stocks and asset allocation funds.
In the fixed account,
funds.
I got you.
Yep.
In the fixed account, what is that account? Is it an annuity? Are you like a TIAA CREF or someplace like that?
Something similar.
The fixed account probably has a good interest rate right now, like
Yeah,
compared
it
to
does. I just looked. It was over 3% for.
So, okay, I would make sure. I'll tell you what I would do. You want to simplify your life? Pull back
Yes.
the risk. Pull back the risk on the equities. Take some of the money that was in equities, pop it into the fixed account, and get yourself to 40% in fixed or bonds and 60% in equities. And put the money in the fixed account. And don't worry and sleep at night. In the equities, pick the index fund that gives you nice broad exposure. You know, a stock index fund, a U.S. stock index fund, an international fund, and maybe a small index fund. And that's it. And put it on auto rebalance and stop worrying about that. And and don't move anything. Keep it where you are. Keep working. That's it. And then when the kids come and you're like freaking out because that's going to be the next thing. Before you start worrying about socking the money away that comes in, that $800, do me a favor and just use that money for a while, or just keep it liquid for a while. Add it to your 130 grand, because let's just see how much this all is going to really cost you. Then when you're done with that process, I mean, probably 90 days or 6 months, you'll get a sense of what your real expenses are. Then call us back and let's see where you are, and let's see if you need to do anything different. But I think you need to simplify everything that's going on in your life, because the blank is about to hit the fan, my friend, and you are going to be a good person and, as you say, a better person for it. But you can't stop it from happening. Things are going to get crazy for you, and probably, like you said, like in a really good way ultimately. But in these periods of transition, try to simplify everything else.
That's fantastic.
All right. So don't move any money. Don't worry about it. You're in good shape, and give us a call back. And thank you, because I just feel like this is such a great call, and thank you for sharing it with us. And whatever we can do to help you in this process, we're happy to do.
Thanks, Jill. I really appreciate it.
All right. Take care. Good luck.
Thank you.
Oh, man. Mark, you are a horrible person. Why don't you adopt 3 kids? Why don't you have a baby so I can at least be your aunt, have another niece or nephew? Don't you want to have a little baby, Jill? Don't you? Don't you? Amanda, are you listening? I think that's the first time I actually mentioned her name on the air. Oh, Amanda likes my girlfriend more than anybody than me, so I'm out of it. She doesn't want a baby, Jill. All right, you're listening to Jill on Money. Call us if you have a name for Mark's yet-to-be-conceived child. Our phone number is 855-411-JILL. Our email address is askjill@jillonmoney.com. We'll be right back.
Eight 855-411-JILL. That's the number to call to have your financial questions answered. Back to Jill on Money with Jill Schlesinger.
You're back with Jill on Money. If you've got a financial question, we'd love to hear from you. Our email address is askjill@jillonmoney.com. Askjill@jillonmoney.com. Mark, what kind of iPhone do you have? I think I need a new phone. You have a 6S. So you're also in an old cycle. I have a 6. I think I'm going to should I get the 10 or the 8? That 8 looks pretty nice. I think that 10 has a larger screen, which is better for my old eyes. I don't know. I could do that on the way home today. I might stop off at the Apple store and just do it. You want one? It's time for Jill on Money family to upgrade. All right. If you've got a financial question, we'd like to hear from you. Also, hop onto our website, JillOnMoney.com, where Mark is creating the Jill on Money weekly newsletter, the Financial Five, the 5 things you need to know every week. Because you can't be held to having to read, listen, and watch everything. So we're going to help you out. And if you come across something that you think is really cool, maybe it's an article, a segment, hopefully not on a competing news station. Let's be honest. I really don't want to be putting up ABC and NBC stuff. So if it's like on CNN, that's okay. Maybe not at all. Don't be sending me other TV clips. But how about you could send me other shows, any cool things that you come across. Shoot us an email. Ask Jill at JillOnMoney.com because we'd love to feature that. And we'll give you a shout out if we do feature it. All right. Right now, let's go talk to Michael from Minneapolis, one of my very favorite places. I had the best time in Minneapolis when I was there. But honestly, Michael, I was there when it was 70 degrees and beautiful. So what's exactly going on the weather watch in Minneapolis right now?
It's pretty cool. It's about 13 degrees. I'm glad you enjoyed your visit, and thank you for taking my call.
It is a pleasure. What can I do for you, sir?
Well, I have some life insurance, and I'm trying to make the right decision about it. I've made some poor decisions in the past on things, and I kind of like to get some information on this.
Okay. Tell me, how old are you?
57.
57. Married, single, partnered?
Single.
Kids? No kids?
No kids.
Okay.
I got the life insurance about 20 years ago when we were building a house. At that time, I was with a girlfriend, and house is now paid off. She's gone.
The mortgage is gone. She's gone, but the life insurance remains. How much life insurance is out there?
It's $62,462.
Well, thank God for that $62. Is this whole life insurance, or is this variable life insurance? What is this?
Says on the statement here, universal life.
Okay.
I got it when we did the house in case something happened to me to kind of help pay,
But you don't need it now. I mean, tell me a little bit more about your life. You're single. Do you have, are you working?
No, about a year ago, my mom got pretty ill, and I quit my job to care for her. They wouldn't give me a leave of absence, and I haven't been able to get anything yet. I'm looking for employment.
Oh, I'm so sorry. How old is Mom?
98.
Holy smokes. How's her health now?
No, she died about a year ago.
Oh, then her health is not very good right now. Or it's fine.
No. One
or the other. So she died. You quit your job to take care of her. She died. And now you can't get a job.
Right.
Oh, man. Are you the only child, or you have sibs?
I have a couple of siblings, but we're not close.
Okay. You were about to trash talk them, but that was smart not to do that on a radio show.
No, I was just going to say estranged, but
estranged is good. That's a fine word. How much? Tell me about other money you have. So, first of all, where are you living? In your own home?
I live in my own home. Yep.
What's it worth?
It's paid off, like I say, probably about $225.
Okay. And what else do you have in savings? How about just like your safe emergency fund?
Savings, cash, CDs, and savings bonds, probably about $30,000.
Perfect. Okay. And what about in retirement savings?
None.
Zero?
Yeah, I get a pension, a small pension of about $2,200, gross about $2,200 a month.
Uh-huh. And that's what you're living on right now?
Yeah.
Okay. Did you inherit any money from your mom?
There's probably, her house is there. It hasn't been settled out yet. I would be splitting that, and there's probably, nothing significant, maybe $10,000.
Okay. So what will your share be of the house?
About? A third. It's probably, I'm going to guess maybe 40, 50,000.
All right. So maybe you'll get 50 grand total, which will be helpful, obviously. Okay. Right. You totally don't need this life insurance policy. That's number one. And the good news is that I want you to do one thing. I want you to call the life insurance company, and I want you to say, if I just cashed out, how much money would I receive? That's what we want to know. We want to know what the cash value of this policy is. And you want to know, is there any tax event if I were to just cash it out? And then you are going to take that money and pop it into your emergency reserve fund so you have it. The only reason why I ask you about the net of tax impact on this cash value is that you just want to know it. So ask them how much would I get if I cashed it out today, and after tax, they'll give you the number. Then you can go ahead and cash it out because, first of all, if you do have a tax event, the good news is you don't earn income like a high income right now. So you might as well cash it out right now while your income tax bracket is so low. So cash it out, take the money, put it in the emergency fund. That's what you should do. Then when you get the inheritance, you're going to put that also in the emergency fund. And you're not really going to do much beyond that until you get another job. That's what you should be doing. And you're going to stockpile cash. And when you get that new position, because I know you're going to get it because it sounds like you're like sort of ready to ratchet things up, whatever you end up doing, then start using a retirement account, whatever they give you, okay?
Wondering on the insurance is it gets 5.5%. And right now it's about $14,000 cash value with no tax.
Well, you can leave it in there for now, but I have a feeling you're going to need to tap it. If you get, again, if you're getting that much in interest, sure, leave it in there. But essentially, at some point, you're probably going to end up having to tap it. That's my guess. Until you get a job. I mean, if you get a job, you won't need to tap it. So so I'm going to revise my advice, which is at that interest rate, you can hang on to it, but be ready to tap that at any time if you need to. Okay, especially if you really need the money. Hey, thanks so much for calling, and we'll look forward to hearing back about the new job. Take care, Michael. You're listening to Jill on Money. If you've got a financial question, we'd love to hear from you. Ask Jill at JillOnMoney.com. We'll be right back.
Twitter, Instagram, Facebook, YouTube, she's all over the place. Go to JillOnMoney.com to find it all. Now back to the show with Jill Schlesinger.
You're back with Jill on Money. Do I ever need to use this mic screen that is here or not? Do you want to see what it sounds like? Wait a second. Hold on. You ready? I can't do it. It doesn't seem to work. Does it sound different like that? Or like that? Like that? Like that? All right. You're back with Jill on Money. And all right. Flattery will get you everywhere and certainly mentioned on the air. Here's a guy who named Gary, whose subject was, "Well done, you," as in not university, Y-O-U. Jill, I just saw your interview on CBSN. That's the streaming part of CBS News regarding the market drop. Fantastic job. Wow. Salient, focused, energized, likable, relatable. I can't say enough nice things. It's a gift to be able to do that, and it's so rare in the media today. Well done. Sincerely, Gary. Gary, thank you so much, because that was just a crazy time, and I appreciate getting a nice note like that. It really means the world to me, so thank you. And anyone you can send a note about some of these appearances, and maybe you like them, maybe you don't. It's okay, but that we like when you like them, we like them. It's a good thing. Here's a question that is from someone named Myrna, who says, I'm trying to find out how to best handle my retirement funds and plan for the future. I'm 55. I'm a renter. I'm hoping to buy my first home. Why? My goal is to retire at 60. First of all, let's figure out what she's got. She's single. So single, 55, no dependents. She wants to retire in 5 years. She's got $45,000 in a Roth IRA, $700,000 in a 401k, $71,000 in stock, $82,000 in cash. She makes about $100,000 a year, and she basically says, "I want to find somebody who will look after all of my assets and advise me objectively. It seems that the people I'm dealing with both want to end up with my business. They're advising me based on buying their products. Help." So here's the thing, Myrna. I think you've got a good BS smell test going on right there. That all of a sudden, can I say BS or not? Okay. All of a sudden you're thinking about, okay, I got to really be managing my retirement well, right? And you come up with what I think is a really smart analysis very quickly, which is these two companies are trying to get my business, and they want to do so by selling me their products. So in essence, what you're realizing is that neither of these organizations or the people working for them is putting your best interest first, because why would they be talking about selling you products that are only theirs when, in fact, that may not be the best thing for you? So your first step is to find yourself an advisor who is held to the fiduciary standard, who puts your best interest first. That may be a CFP. That may be a CPA who holds the designation PFS, Personal Financial Specialist. But it might be someone who works, who is associated with an organization called NAPFA, N-A-P-F-A, NAPFA.org. But you want someone who's going to put you first. And in order to put you first, they have to say they're putting you first. And you know what, Mark, let's send her the revised and updated 10 questions you should ask a financial advisor. And let's also find out where she lives, so maybe we know somebody who can help her out. And because I think that you're absolutely right that you have a bunch of questions here that are important and need to be answered. I mean, the fact that you're a renter and you want to buy, I don't know if you need to buy. I'm not a huge fan of just buying because, you know, people think it's like, oh, I have to be buying. You don't have to. Maybe it's better to rent. Depends where you live. Here's a question from Nancy, who has a question. Purchase a home or pay off debt? I'm scheduled to receive an inheritance in the next couple of months. $30,000. I have $23,000 in credit card debt and loans. I pay $1,200 a month in rent. Would it be wise for me to try to purchase a home or pay off my credit card debt? Slam dunk. Pay off the debt. Nancy, pay off the debt. God bless. I'm so happy. That to me is like a perfect situation. So I pay off the debt and I have an extra $7,000. Put that in your emergency reserve fund. Make sure you've got an emergency reserve fund. And everyone out there who's like, oh, I got to buy. You don't have to buy. Renting is great. Mark, you rented perfectly. You actually, you know the best thing that never happened to you? Buying that apartment is right. Although you probably would have made money flipping it. You probably would have. I know. But I'm just saying that Mark was in the cheapest rental. It was a studio, right? It was a nice studio. He tried to buy it, and our friend screwed up the loan, if I recall. Friend of the show screwed up the loan. It happens. But the fact that fell through, it was a blessing. Because I think your rent, what was it, like $800 or $900 or something? $1,100 a month in New York. But you saved so much money. And then when you found true love and bought the big place, you had all that money freed up to be able to do it. Did work out. If you want a life like Mark's, give us a call. We could try to figure it out for you. 855-411-JILL. That's our phone number. Our email address is askjill@jillonmoney.com. We'll be right back. You're back with Jill on Money. This is the program that takes the mystery out of your financial life. I am Jill Schlesinger. Mark is running the show. If you'd like to get in touch with us, just give us a holler. Ask Jill@jillonmoney.com. That is what Milton did. I've been a huge fan of your radio show and podcast for quite a while. As a 24-year-old, your interviews with guests and responses to listener questions, they're just gold. I'm reaching out to ask what are the next steps I should take as I work to become a CFP, a Certified Financial Planner. I passed my exam in July 2017. Since then, I've been working for a small CPA firm that is just building their advisory practice. Before that, I worked at a wirehouse as an assistant, and I did taxes at one of the large tax corporations. Though I passed, I still have not met my work experience requirement and have estimated that I won't be done with that step until the second half of 2019. Since July and now, I've passed 2 of the 3 enrolled agent exams, as I really do enjoy the tax practice, and I plan on taking the 3rd exam in May. That's amazing. By the way, anyone who enjoys taking the enrolled agent exams is a special guy. As someone who's just beginning in this industry, is it necessary to go after a Series 7 or 66? Is the FPA residency program a good investment to knock down experience hours and meet other CFP candidates? Other tips that you could recommend? From Milton. Hey, you know what I think? First of all, go to the CFP website. Let's Make a Plan is the consumer site. The CFP.net, I think, is for the advisors. And check that out. I think that having the experience of working and building an advisory practice is a great idea, and especially if you like doing taxes. I think that what you may want to check out, if you are going to sort of look at this world and sort of the convergence of taxes and planning, there's a designation from the AICPA called the PFS, Personal Financial Specialist. And there may be some stuff there where you might be able to get some information and also be involved in a work group. And the other idea that you could really start to think about is working for an independent financial planner who will really help mentor you. And there's a lot of people who will be out there for you. I would check that out. CFP also has a career part of the website, so check that out at cfp.net. Thanks so much for your question. Best of luck. It's an amazing career. And remember, I am the senior CFP ambassador, so I have some skin in this game. All right, next hour, we go to our interview. You're listening to Jill on Money. We'll be right back.
It's the weekend, and that can only mean one thing. You're listening to Jill on Money, the show that takes the mystery out of your finances. Here's your host, Jill Schlesinger.
Well, it's hour number 2. I know it's March Madness. It's St. Paddy's Day weekend. In my family, we just call that Emily's birthday. Happy birthday, Emmy, my niece. We used to tell her that every year there was a big party for her in New York City, and we would turn the TV on and show her the parade. She kind of bought it for a while. Not that long. It's also a big-time tax prep weekend. I think there's like this 1 week, I think that the IRS gets more returns than any other week, and it may be this coming week. It may be that sort of the third, fourth week of March where like the bulk of returns come in. 155 million returns that are expected. And, you know, it's a drag. I know it's tough to like pull all your docs together and get everything going. But on the other hand, it can be cleansing. And if you don't actually have paper files, it's also probably pretty good practice to go through and like delete stuff in empty trash cans and make sure you know where stuff is. But today we're going to talk a little bit about the perils of the tax filing season when it comes to your identity. And that's why we have brought back on the program Adam Levin. His book is Swiped: How to Protect Yourself in a World Full of Scammers, Phishers, and Identity Thieves. Adam's going to walk us through what we need to know this tax season. Well, you're joining us today because you are an expert about identity theft and all things identity related. And I want to understand what we need to know right now about tax filing season, because this could be a quite dicey tax season for lots of reasons. So what should we know?
Well, first of all, let's start with the premise that scaring is caring. So we just want everyone to know this is all about love coming to you right now. But the truth is, you know, we're living in a post-Equifax world, and Equifax is just one of the horrible breaches that we faced. It happened to be a rather extensive one. But as a result, the Social Security information and pretty much everything else that one would need in order to masquerade as if they were you is out there, and it's out there in a big way. So you're particularly impacted during tax season because there is nothing more delicious to an identity thief than using your information to file a fraudulent return, to grab a refund, and disappear off into the wilderness, and you're left holding the bag.
This is a scam that's been going on for a while. It's been escalating. How much money is lost? Like how many dollars of fraudulent returns were filed in the last year?
Well, estimates vary. At one point, they projected it could be as much as $21 billion.
Oof.
Now, I think that number is significantly less than that, and the IRS is proud of the fact that they were able to stop a significant percentage of fraudulent returns because of their filtering systems and their cooperative efforts now with states and tax preparation organizations. But the truth is we're still talking about billions of dollars. And it's a double hit because not only is this money that went to the wrong people, but then the IRS has to make sure that the money goes to the right people, and we as taxpayers end up footing the bill for all the people.
What happens is they file this fraudulent return. They've got your social, they've got your address, they file a return. But I don't understand. How do they get the money? The money goes where? They just say, send it to this account?
Well, what they would do is they would give a fraudulent address to send the money, or they would do a debit card or some other instrument that they would find that they could get the IRS to load it on. Now, the truth is we know the IRS certainly isn't going to do iTunes cards, but when people are committing tax frauds against consumers, they will tell consumers in a moment of panic for the consumer, I want your money and I want you to put it on this iTunes card, which granted is curious and should be a tip-off.
Okay, but so there's one thing which is like the fraudsters have your information, they file a return, they capture the refund, the fraudulent refund, and they go away, and they may or may not be caught. Then the next thing is where you have someone who's actually scamming you during tax season.
That is correct.
And that is a phone call or an email, right?
You will get a phone call or an email. And, of course, the most important thing to remember is the IRS never initiates contact with a phone call, even though there are some debt collection companies now that are collecting for the IRS. They will never ask you to give them something over the telephone, and you always have the right to appeal. And you always make the check out to the United States Treasury, not to, for instance, IRS, which could be altered to look like MRS. And that has been the practice of a lot of these thieves.
Oh, my God. That's amazing.
That's the reason why they went to the United States Treasury, is because that would stop people from altering checks to make it look like Mrs. as opposed to IRS.
So what do we need to know? The scammer calls, and people listening to this say, oh, I know this, but we need to talk to both our children and our parents who may not know this. So first of all, the IRS never initiates a call or a text or an email. So as soon as you get that call, you hang up, right?
Hang up, delete the email, delete the text, forget it.
Okay. So let's say you get an email from something purporting to be the IRS. Should you report that you got this email?
I would suggest that you do report it to the Internal Revenue Service. They have an address that you need to forward it to.
It's like something like irsphishing.gov. Something like that, right?
Yeah.
Okay.
And the important thing is report it. You know, you may say, it's just another thing. They don't. Sometimes, though, what really happens and is very important is that you might give the IRS something that could represent the missing piece of the puzzle. You never know.
That's
so
interesting.
Therefore, where you have an opportunity to help, you're not only helping yourself, but you're helping the IRS and you're helping all other taxpayers, if that can give them a better handle on what the problem is.
If you were affected by the Equifax data breach and you froze your credit, does that preclude someone from filing a return on your behalf
No,
or
it
not?
doesn't.
So don't misconstrue the idea that you actually took action, froze your credit. Someone could actually file a return on your behalf still.
They could.
Okay.
They could.
So the only way around that is to file early.
File early. Unfortunately, for many people, the bad guys have already filed. So you need to be looking for those red flags and take them seriously.
Okay, what are the red flags?
Well, number one, you attempt to file your return and you're blocked.
Okay, that's not even a red flag. That's like a screaming siren red flag, like emergency.
Flashing red light.
Yeah, exactly.
Then you're waiting for your refund. It never shows. You call the IRS. You finally get through, which is not so easy since we've had cutbacks and attrition at the IRS, and everyone is trying to answer phone calls about the new tax law that has confused everyone. But you get through, you explain the situation, they get back to you and say, but we already sent you your refund. That's a problem. Or the third one, which is a bit more subtle, equally as dangerous, is you get a notification from the IRS that you have woefully underreported your income because unbeknownst to you, someone using your Social Security number has gotten a job and the income is being reported to the IRS by way of your Social Security number.
What?
So you get a deficiency notice.
Wow.
Not unheard of, not the most common, but very disturbing.
We'll get back to our interview with Adam Levin in just a minute. If you've got a financial question, we'd love to hear from you. Ask Jill at JillOnMoney.com. Hop onto the website during the break and check it out. And you can subscribe to our newsletter, JillOnMoney.com. We'll be right back.
Have a finance question? There are many ways to reach the show. You can call anytime at 855-411-JILL, send an email to askjill at jillonmoney.com, or tweet a question on Twitter using the handle at JillOnMoney. Just use the hashtag AskJill.
You're back with Jill on Money. Are you struggling to figure out how to get started on your taxes? Is this just the weekend where you had said, I'm clearing off the kitchen table, I'm going to put all my documents in front of me, and I'm going to get going? That is actually not a bad place to start. I find that trying to do it during the week in the middle of like your craziness is so difficult. Every year, when I do my taxes, when I'm watching the Academy Awards, I usually watch a little bit of the red carpet, got all my stuff in front of me. And I go, oh, where's the rest of my movies? Where's my 3 billboards, Mark? You didn't get it. Now I have to go buy it. Oof. And he didn't get The Darkest Hour. 2 that we wanted. Now I might have to go see them. You going to go see The Black Panther? I am. I totally want to see that. You know what I watched recently that I hadn't watched from last year was the year before? Manchester by the Sea. Oh my God, so depressing. So I literally said out loud, is anything good going to happen in this movie? That is just, it was so hard to watch. I mean, the performance was great, but that was a rough one. Anyway, let's get back to you. Your financial life, your identity is in the ether right now. We are talking about this with our guest, Adam Levin. He wrote a book called Swiped. He has a lot of experience with this. He's talking about, in this part of our interview, some of the scams that we need to know about in 2018. And so just so you understand how sophisticated some of these fraudsters are. So here's more of our interview with Adam Levin. You say there's a W-2, W-9 scam that is going on right now. Can you talk about that?
Well, the scam, and it's usually directed at companies, normally at the HR department of a company, and that's where someone gets an email. They think it's from a superior within the organization asking them for the backup information on W-2 forms with which they dutifully comply. And then they run into that specific person in the hallway or somewhere in the headquarters, and they go, by the way, did you get the information I sent you? And the response is, what information that you sent me? And I've worked with a lot of companies where there are a lot of very freaked out employees whose information had been exposed because someone fell for it. So the number one rule of thumb, if you get an email from someone within your organization telling them they need you to provide them with backup information for W-2 forms, call them.
Make sure. Make sure that's
critically
the right.
important to make sure.
If you are somebody who's a gig economy person and you score a deal, I'm a graphic designer, Adam hires me to redo his website, and Adam's bookkeeper sends me an email and says, okay, send me a W-9 form, right? Should I not do that via email?
You should never, ever send sensitive information by way of email.
Ever.
Ever.
don't send it via email because why? So walk me through what happens. Sending it through my Gmail account, is it because my Gmail is not secure or because someone can intercept an email or what?
Emails can be intercepted, and accounts, though becoming more secure, doesn't mean they're completely secure. You also don't know if the person you're sending it to, even if it's a legitimate situation, hasn't had a compromise on their computer or their mobile device. So as a result, it's always better to be more careful, although I had an incident not too long ago. A friend of mine said, so I Federal Expressed my information to my accountant.
Mm-hmm.
It arrived at my accountant's office. They noticed that the envelope had been altered.
Oh, no.
And someone had actually gotten, because someone was looking for any, like, Federal Express package that was being sent to an accounting firm. Because you never know. It might have that wonderful information in there you need in order to commit a fraud.
But okay, so what do? You got to send your stuff to your accountant. Let's say your accountant's not in your hometown. What should we do?
Well, I still think that you should Federal Express it or express mail it or whatever. It's certainly more safer than most ways. In the alternative, you could possibly call your accountant and provide information, but they still need the form.
Right.
So the best way to do it, or here's another one, that you could fax it, but you just have to make sure that there is someone standing by the fax machine that you trust and that your accountant confirms to you it has been received by way of fax.
So wait a second. So a fax is safer than an email with an attachment?
A fax is definitely safer than an email.
Mark, did you know that? I didn't know that.
If you're using encrypted email with where there are keys and with both sides know that it's sensitive, and a lot of people find that extremely cumbersome, although, again, it's the whole argument of convenience versus security.
Yeah.
When you're dealing with information as sensitive as financial information and Social Security numbers, everything that you can possibly do to protect it, you should do, including, if possible, I'm getting in my car, I'm getting in a cab, I'm coming over, I'm giving you the information.
Oh, what a drag. So mad about this. Okay. Social Security cards.
Yes.
Which you never should carry around with you, have
Correct.
this very important information. In the past, a Medicare card, your ID was your social. That's changing this year?
It is changing, but think about the fact of how many tens of millions of us, and I'm one of the us, tens of millions of us are wandering around with these cards that have Social Security number plus a letter. Now, that's brilliant masking.
Yeah. Don't 1 in 26 chance of figuring that one out.
There you go. So what I suggest to people is until you get the new card, take your card, make a copy, redact most of the numbers out, and on the back, put an emergency contact person with a phone number.
Okay.
And if you know you're going to a facility where, for whatever reason, you absolutely need to have your card with you, then only on that day take it with you.
Right.
But any other day, take this copy of your card with redacted numbers, perhaps, again, all but 1 or 2, with your emergency contact on the back, so that in the event that you faint or you're in an accident and you're unconscious, that at least when they get their hands on your wallet and your card, they're going to have an emergency contact person, and they're going to be able to see that it is a copy of the real card.
Adam, I always get so uptight when you come in here. I tell you,
Scaring is caring.
Scaring is caring. There are also scams that are taking place with Medicare and Social Security. So, I mean, I always just think about how if my mom, who is in her late 70s, got a call, I think that she said, hello, I'm from, the Medicare, da-da-da. I'm sure she would just say anything. So is this the same as the IRS in that Medicare is not calling you for anything?
Well, they're certainly not going to be calling you to verify personal identifiable information or to authenticate information. And I think that's the most important rule of thumb in this area, is never authenticate yourself to someone who contacts you.
Okay.
If you initiate the conversation, if you were to call, let's say, the folks at Medicare or the Social Security Administrator, they don't know who you are. So if they ask you to validate yourself, to authenticate yourself, that's not unreasonable. Then you just have to decide if you're comfortable enough authenticating yourself. But scammers will try everything, including when you look at your phone, the caller ID will make you feel like it's a government agency or somebody official contacting you for information, because they're great at spoofing, just like they can spoof email, and they're getting better and better at it, and websites. They can also spoof caller ID. So, unfortunately, never trust. Always verify. Always be on the alert. And know that this is a real asset. Your personal identifiable information is an asset that someone can definitely use against you. And what they're counting on is that each and every one of us has a day job, whether it's raising a family, running a company, owning a company, being engaged in philanthropic activities or community activities. We're busy and we're distracted. But to hackers and scammers, we are their day job.
Okay, we'll be back with our interviewee, Adam Levin, in just a second. During the break, maybe you want to go subscribe to our podcast, Better Off. It's so easy to do it wherever you get your podcasts. Apple, Stitcher, Google Play, wherever. Check it out. It's Jill on Money, and we'll be right back.
Follow Jill on Twitter and Instagram for more personal finance content. Just use the handle @JillOnMoney. Now, back to the show.
You're back with Jill on Money. And we are so delighted that you are joining us. It's tax prep time. And there's so many scams that are surrounding your tax filing time, but there are other scams that are out there that you need to know about. Our guest this hour is Adam Levin. He is the author of a book called Swiped: How to Protect Yourself in a World Full of Scammers, Phishers, and Identity Thieves. And you're not going to believe it, but these bad guys are so bad, they're going after your kids now. Unbelievable. Child identity theft is on the rise. So we got to worry about our parents who may not realize they're getting scammed. And now our kids. Take a listen to this. When you were on last time, you came and you told me about child ID theft. And I found this to be interesting because since you've been here, we had a guy who called up and said that his 2-year-old's social was all of a sudden compromised. And he found out in a weird way. It was in the whole Equifax rigmarole, but like he was just typing in his and his wife's and the kids and just wanted to see what came up. And he found that his 2-year-old had a credit file.
Yes.
He was shocked. He goes, how did that happen? Didn't apply for anything. Where would they have gotten that information?
Well, they could have gotten it from any one of a number of breaches. They also could have gotten it from someone taking Social Security numbers out of a hospital, for instance, because children normally get them while they're there or close to the time. But again, they're between the information that's sold on the dark web and all of the breaches and all of the social networking oversharing that goes on that enables hackers and scammers to phish you, and sometimes you'll answer a phone call and not realize that it wasn't official, or you'll respond to an email or something, and somehow your child's Social Security information will be part of the information that you gave up or has been given up as a result of these breaches and hacks, and it's out there. And to an identity thief, there is nothing more delicious than a child's Social Security number.
Because it's clean.
Pristine. And they can create whatever they want. It's like the old line about we created it and then destroyed it. Well, the truth of the matter is that's what they do with credit files.
Adam, what is it going to take for us to get a better grip on all of this information? I asked another security expert, why is it that the position is not that every single file is frozen until it is unfrozen? Why shouldn't the first position be you start with frozen credit and you must unfreeze it to actually get credit? How long will it take to get to something like that?
We can't seem to get Congress to agree on the day of the week. So therefore, the concept of them, I saw Senator Warren's bill, which I thought was great, about, permanent credit freezes. And the truth of the matter is, if you look at it from an economic standpoint, everybody wins with frozen credit. Everybody. And again, it's not the silver bullet, because you can still be a victim of medical and tax and child in many other ways. Criminal identity theft, they can still grab your existing accounts. But when it comes to new account creation, freezing is the best thing we got at the moment. But people also have to remember, if you freeze, you can't just freeze one, you have to freeze all three.
And then now the fourth horseman, this Innovis.
Innovis, which is lurking around. And there are something like also 400 different specialty credit reporting entities also out there. But to the economy, think of the billions of dollars that's lost. Think of the economic dislocation that occurs with consumers, not to mention emotional dislocation, reputational damage, and how businesses are out significantly as a result of this. So we all lose. We all lose. Government loses when you talk about fraudulent tax. So a cost of a freeze is minuscule to a credit reporting agency. And what they could do is say to business, look, we're going to do this, but we're going to charge businesses just a teeny bit more when you want to pull someone's credit than we normally do. And the business obviously will turn around and pass it out to consumers, but it will again be infinitesimal. But think of the billions that could be saved, because this is all part of a cooperative, collaborative effort. Government has failed. Business has failed. Consumers have a shared responsibility now to protection of our data. Didn't ask for it.
Right.
Didn't want it.
Right.
Oftentimes don't even know how to do it. But we are put in the situation where we have to do it. And it's time for everybody to band together and finally get this done, and having a universal credit freeze mechanism that starts with the default position that it's all frozen and we go on from there is a heck of a lot smarter situation than we have now.
I can't let you go without asking you something, because you are the former director of the New Jersey Division of Consumer Affairs. And you have a relationship with Senator Elizabeth Warren that predates her being in the Senate, because you know her from old days. And my question to you is, tell me about the CFPB under Mick Mulvaney and the defanging of this organization. What can we do to fight this?
The only thing we can do is really put pressure on the Congress. We fought so hard to get a Consumer Financial Protection Bureau. We finally got one under Richard Cordray. It was activist. It was exciting. It was doing important things. It attacked the whole issue of the arbitration clause. It was trying to bring some kind of sanity and order to payday lending. It looked into credit reporting agency abuses and the like. It was making real progress. And these guys come along under the guise of, we need to help business. We need to make sure that business isn't overburdened. We're here for the small business. But what I find interesting is the real role of the CFPB, in addition to protecting consumers, is to protecting legitimate business against predators. Because we all lose when predators are out in the marketplace. And under the guise of protecting the little guy in the business community, what they're really only trying to do is make it a lot easier on the big guy. And a lot of the big guys have been taking liberties with consumers for years. And unfortunately, this agency it is in the process of being transformed from a watchdog into a lapdog. And that's heartbreaking.
Thanks so much to Adam Levin. That was a great interview. And I guess the number one thing to remember, be cynical and be alert. The thieves are out there. You're listening to Jill on Money. Give us a holler. Our email address is askjill@jillonmoney.com. We'll be right back.
Twitter, Instagram, Facebook, YouTube, she's all over the place. Go to JillOnMoney.com to find it all. Now back to the show with Jill Schlesinger.
You're back with Jill on Money. Remember, this is the place where money is not scary or boring. It's a little bit of fun. Not fun for the sake of like, oh, more money's more fun, but more like it can be really less scary if we make it a little bit of fun along the way. Okay? If you've got a financial question, we would love to hear from you. It's very easy. Ask Jill at JillOnMoney.com. I think it's at some point, Mark, we're going to close down the phone line. What do you think? Should we do that? Should we get rid of the phone? No one's calling. Are people are calling? They're not doing drunk dialing. Sometimes we get drunk dialing, which is pretty funny. But anyway, you want to call? Call us. 855-411-JILL. I guess we have it. Might as well use it. Kent writes, with the new tax brackets in place for 2018, would a sound strategy be to withdraw larger than required distributions? What Congress giveth, Congress can taketh away. Married filing jointly brackets have been expanded. My wife and I are 67. We've piled up about $2 million in IRAs, and we don't need the extra income in this scenario. Yeah, you know which tax bracket is fascinating to me? This 24% tax bracket. That new one? That is if you're married filing jointly, $165,000 to $315,000. That's a huge number. And for singles, it's $82,500 to $157,500. So I think that that's actually a really good idea, which is, according to Ed Slott, CPA and master of IRAs, tax brackets are about the lowest they've ever been. That doesn't mean your taxes are the lowest they will ever be. I'm just saying that he says tax brackets. So, for example, we talking about the 24%. That's a very low rate. So let's say you were, let's say that you had $170,000, $180,000 of income. Yeah, why not take an extra $100,000 out and pay the tax that's due and be done with it? Who cares? Because you're not going to flip into another tax bracket. Even if you're in the 22%, because there's a big jump. It's 10, 12, then it goes to 22. 22 and 24 are like the meat, right? 22% if you're married filing jointly, $77,400 to $165,000. And if you're filing single, $38,700 to $82,500. So essentially, you've got this 22 or 24% tax brackets that are really low. And I think that's a great idea. So, a lot of people are also thinking that they should convert their existing IRAs. That might be a great idea. And, if you can, I would do it. But for those of you who are retired and you've got piles of money, especially if you're early in your retirement, why not? I think it's a great idea. I think that you are well served by doing this. So I say go for it. And thank you for that wonderful note. Okay. I can do this. This is from Jeff. You helped me out in February of last year. I want to check in and let you know of some changes I've made. I want to see if there's anything else I should do. After hearing Jill's advice, I joined Vanguard Investment Services. Mark, he also added a Haven Life policy after you recommended that. Haven Life is that cool. You can buy term up to $1 million and you do it online. Our baby's born. We have a healthy infant. My wife's staying at home. We're functioning on my income. 35. I will have a pension of about $11,000 per month at age 55. Got a bunch of money in 457, about $250,000, maxing it out. A 401k, $237,000, maxing it out. Vanguard brokerage account, $215,000. Some stocks, $220,000. Roth IRA, an UTMA, and a Vanguard 529. Rental properties. Amazing. So, the question really is, should I be doing anything different? And you know what, Jeff? I think you're doing a great job. The one thing that you ask about, changing the 401k to a Roth 401k, I would totally do that. If you have the Roth 401k option, one of the beautiful parts of it is that you don't have to worry about income limits. A Roth IRA, there's an income limit for contributions, right? You cannot use a Roth if essentially, as a couple, you make more than $200,000. For a single, it's $135,000. So if you're making more than that, and I think you are, then yeah, use the Roth. It's way better to do that right now. And, your tax rates are so low that I think that the value of using a Roth is huge right now. Pay the tax that's due on that money. Boom, let it go right into the Roth. I love it. If I had a Roth option, I would use it. Unfortunately, my employer, also known as myself, doesn't offer that. Mark, I crack myself up sometimes. I really do. I'm amused. All right. So, yes, I love all these new sheets I got from Ed Slott with all the retirement plan contribution limits and tax limits. They're beautiful. Thanks, Ed. All right, you're listening to Jill on Money. The phone number here, 855-411-JILL. Send us an email, askjill@jillonmoney.com. We'll be right back. You're back with Jill on Money. If you've got a financial question, we'd love to hear from you. Ask Jill at jillonmoney.com. Bruno writes that he listened to my podcast recently. And I guess on that podcast, I was talking about the beauty of a Roth. He says, what happens if in retirement I'm at a lower tax bracket? My wife and I make $200,000 a year. We live on about $80,000 to $90,000 a year. Isn't it safe to say that when we retire, we will be withdrawing at a much lower bracket? Hence, better to get fund a traditional 401k and get the savings now. I guess the answer is this: we just don't know about taxes. So, if you really feel like you want to protect yourself, maybe split the difference. Do a little bit of both. So you have some money where you understand exactly what the tax liability is. Some money that is, you're getting your money today. I think that's not a bad idea. Joe from Chicago writes that he says that you recommended, I spoke to you and you recommended that I sell off a large portion of my stock portfolio to begin the process of buying a second home while keeping my 3.5% mortgage rate on my current home. I wanted you to know that I sold off a large portion of my portfolio. I'm going to cut that down to pay for the second home, and I appreciate the advice, and I'm so glad you took my call. Thank you. That's so nice. I've been listening to your show. This is from Jay. He goes, I'm listening to your show now for a while. I really love it. I'd like your opinion on fundamentally weighted and value-weighted index funds. I learned about them recently. Oh, God. Can't you just just buy index funds? I'm not that interested in the fundamentally weighted and the value-weighted. I mean, I know there's different ways of measuring it, but can't I just get people to use index funds and go to sleep at night and make this easy? Come on. Hans wants to know, basically, this is a great question. He says, savings and loans went bankrupt because the interest rates they were paying on CDs was higher than the interest rates they were charging on mortgages. How high do you think interest rates can go before savings banks and credit unions start taking losses? I don't think that's going to happen again in that way. I think you're asking about the last crisis. So I don't think so. I wouldn't worry about that right now. Other things to worry about. You're listening to Jill on Money. 855-411-JILL. Our email address is askjill@jillonmoney.com. It's been a great show. Hop onto our website, jillonmoney.com, if you have any more questions. We'll see you next week.